No, still can't hear you. There we go.
Okay. So the backcasting idea is really asking where do we want to end up, and so what are the actions that would be most beneficial for achieving the goals in the long run. But in the near term, there is necessarily a level of inertia in how fast we can move on things, and so we need to be nested in the realism of what is current policy and how fast can we change from where we are right now. But meshing that with the long term, we need to think about, okay, given those near-term constraints, what is it that we want to end up happening? And in other studies, we've taken a backcasting approach to the level of electrification, where we're thinking about, okay, it's cost effective to end up close to 100% electrified if we're in a net zero world or a very clean energy world. And with the Oregon 80% target, that is probably close to, it's probably 90 something percent clean energy given the other emissions that are happening in the economy. And so if we backcast from there and think about the lifetime of a vehicle or the lifetime of a water heater or air conditioner, then we could think about a target being 2035 to be able to roll over the stocks such that they're close to 100% electric by 2050. So that's kind of the bound on the back end where we want to end up, given the lifetime of a stock. That would be setting what our target we would like. On the near term side, there is constraints or bounds on the feasibility of achieving things, the political reality of being able to put policies in place in a certain amount of time. And so that's setting constraints on how fast we can move on the front end. And so I would couch it in those sort of terms, where there are near-term constraints on what is existing policy, what does our existing system and markets, et cetera, look like. In the long term, we've got a lot more degrees of freedom. And so what would we like to happen? And we can be more creative the further out we go.
Thank you, Jeremy. We've got a few more comments in the chat, but in the interest of time, I'm going to steer us away from customer side batteries and move us to energy efficiency in buildings. We've got quite a few questions on here. I think our intent is to probably spend around 20 minutes or so on this slide. Going briefly through the inputs, we've got building envelope, space heating and residential and commercial, improvements to the natural gas space heating, residential and commercial water heaters, and industrial process efficiency. Our first question has to deal with the building envelope, where we have an existing assumption of 10 to 20% household energy savings based on a weatherization of 95% of building envelopes by 2040, and we're curious to get your feedback on that assumption. So again, same format, raise hands, drop it in the chat. That first question was great. Looking forward to hearing more from you. And Jeremy, please, if there's anything you want to clarify or add, just hop in.
I think from my perspective, the most valuable inputs here on building envelope would be, if we were to weatherize, what would be the service demand reductions in heating service demand and cooling service demand? That's kind of how our model works. And so having that level of detail would be great if anybody has that kind of information.
And I believe you all have these slides, so if nothing is currently coming to mind, you do know where to find us, and we're always open to your input. But we'll leave this open for just a minute, and then we can move on.
Andy, we do have a couple hands raised. First is Wade Carey from Monmouth.
Oh, great. Thank you.
I'm curious as to the assumptions of how many, especially residential structures, actually need existing or more weatherization. I know the utilities, the COUs have been actively doing weatherization since the early 80s. And we're actually finding that there's not that many out there that still need an abundance of weatherization work. And so I don't know how that compares to the IOU existing stock. I know commercial buildings have been previously underserved in weatherization, mainly because they haven't qualified for a lot of Bonneville incentives to do that work. But that's something that we should definitely look at is if you're estimating 10 to 20% of household energy savings, is that realistic given how many homes may or may not still need weatherization measures?
Yeah, that's a great point. And it's one that if you could point us towards information on that, we would appreciate it. It's not something that we currently have a good handle on, current numbers of weatherized homes.
Okay, I know Bonneville has for years been doing residential building stock assessments as well as commercial building stock assessments, and that's probably a good source of some information, at least from their service territory. And I'm sure the ETO has quite a bit of data, at least over the last 25 years.
Great, thank you.
Thank you, Wade. That's great.
Andy, we also have a hand raised from Lainey Ralph.
Oh, hey, Lainey, go ahead.
Hey, I had a question. For this input, is it just one singular input, or will there be a breakdown by technology, like
So
Windows versus insulation?
it is one single input, but it is broken into the heating service demand and the cooling service demand. So it would be a percentage for heating, a percentage for cooling, which are usually different amounts of savings.
Mm-hmm. Okay, that's helpful. Thanks.
Thanks, Lainey. Jessica, any other hands up or chat questions?
I don't see any other hands raised at the moment, and the chat is quiet, so.
Great, thank you. Well, let's move on to space heating in both residential and commercial. Our starting point note is that we're assuming that existing policies play out. There's a footnote at the bottom of this slide, sorry, with a link to the roadmap to 2030 from the Oregon Climate Action Commission. Many of our existing policy assumptions do stem for that. So if you're not familiar with that document, please have a look. But our question to you all is, what should we set as the electric heat pump adoption goal out to 2050? And again, Jeremy, if there's anything you want to add, please do so. Jessica, if you see any hands pop up, let us know. Again, we're talking heat pump, electric heat pump adoption goal out to 2050.
Not seeing any hands raised and nothing in the chat. Q&A.
Okay.
I'm coming off mute. Sorry, I've got my hand up, but I put it up a little late. This is Claire Brihada with Climate Solutions. I mean, currently Oregon's goal is 500,000 by 2030. So I don't know if it makes sense just to scale that, like put that on a time scale and figure out what does that, is it 500,000 every 5 years? Where does that get us by 2050? Or given that we want to be pretty much net zero by 2050, is it 100%? 100% heat pump adoption? That's what comes to mind for me, at least.
Andy, Alec has a question in the chat which says, do we have any benchmarks from other states?
That's a great question, Alec. Jeremy, are you aware of any data stemming from other states on this?
So it is kind of a typical policy at the national level and also in other state plans to be targeting 100% electric sales by 2035 in residential and commercial. In industrial, then it's different. But that is a balance between those two things that I was suggesting. The one being aggressive on getting to levels of electrification by 2050 when the target hits, and then the feasibility of achieving it on the nearer term side.
Thank you, Jeremy. And there's a note from Claire in the chat that Maine is a great place to look for data from a different state.
Andy, we have a question or a hand raised from Robert Westerman. Robert, if you want to come off mute.
Great.
Thank you. Do we have any current data on the current level of installation of heat pumps since the incentives have hit the market? Just a perception on a local level down here on the Oregon coast. Our electricians are installing a lot of heat pumps every day. It seems like it is the #1 installation that we are currently doing in this arena. So just wondering if we have any current data that might help us come to a more realistic approach of what we can visualize being installed by 2050.
So we are incorporating data in our starting point assumptions that comes from studies that are forecasting how the incentives are going to drive heat pump adoption, and it's quite rapid levels of adoption under IRA incentives, which is probably reflective of what you're describing there. Our data sets to describe how many heat pumps versus gas furnaces and so on are in the stock right now are coming from the NEIA stock assessments, and that's probably because they're a year behind where we are right now. It's probably not enough time to have seen how the incentives are playing out. But I think that in future iterations of state energy strategy, that's the kind of learning by doing data that will be super valuable for seeing how effective these policies are going forward.
I just want to elaborate, sorry, Andy, on the point that Jeremy just made, which is that the idea is for the energy strategy to be revised over time. And so what we're setting up here is kind of a starting point, and we'll adjust as we learn, which also I think helps emphasize that we know that we won't get it right, but we want to make reasonable assumptions. But assumptions that meet our climate goals. So there's some space there for, I think Jeremy used the word creativity, but I think for looking at what others are doing and what's happening in other places that have stringent targets.
Doesn't look like we have any more hands raised or comments in the chat, questions in the chat.
I'll expand our question a little bit to touch on natural gas space heating. If there's any input or comments related to adoption goals in that space, we'd love to hear from you all. Well, maybe while we let folks simmer on that for a minute, we can move our line of questioning over to water heaters. And I apologize, we've got a couple typos here. Instead of electric heat pump adoption, our goals our questions are very specific to our input goals. So for residential and commercial water heaters, hoping to hear from you folks about adoption goals in those spaces or any other trends you'd like to touch upon. And if there's any clarification within the water heating spaces, Jeremy, please jump in.
Andy, it looks like Wade from Monmouth Power and Light has his hand raised.
Sure, go for it, Wade.
Yeah, thank you. I think for residential hybrid water heaters, the adoption goal should be, it shouldn't be as aggressive as the heat pump goal. Residential heat pump water heater adoption has been extremely problematic for most utilities. They often don't work at how the house is set up, where the plumbing is currently at, where they're going to put the unit. They're problematic in manufactured homes. People don't understand them. They're vastly more expensive. And so we've seen a really heavy lift to get more adoption of these units. Heat pumps have been around for decades. People know them, they trust them, they're familiar with them. They provide air conditioning, is where traditional heating does not. The only real benefit to a heat pump water heater is that it's more efficient. And so I think I would temper our expectations on setting a goal of for adoption on that until at least there's a great deal of customer education, or the technology becomes down in price pretty dramatically.
Yeah, that's a great point, and that's something that in our national studies we reflect with quite a small penetration of heat pump water heaters, about 30% sales by 2035, and the remainder is actually resistance water heating, just because it fits into the footprint. You don't need to be building new ductwork, and you're addressing the concerns that you were just raising there. So if anybody has thoughts on that, where like a goal doesn't necessarily need to be heat pump orientated, but it could be on fuel switching and include resistance water heating as well.
And just to note that David has a related comment or question in the chat, looking at replacement of existing gas furnace stock as a driver of heat pump adoption for at least a decade.
It looked like Jeff Mitchell had his hand up, but maybe that was the question, and so he put it down again.
No, sorry, I went ahead and dropped my comment in the chat. But related to the electric federal standard going into effect for water heating in 2029, which will require storage water heaters above, I believe, 30-gallon be a heat pump.
Thank you to all of you putting comments and questions into the chat. And again, we are capturing those for the record.
Andy, it looks like Robert Westerman dropped a question in the chat, which is, does the discussion on water heaters include InstaHots and or solar thermal systems?
I will let Jeremy chime in on that.
We can include solar thermal systems. We have that technology. I think InstaHots, we do not have that. But it is something that we could potentially represent if that were going to be a large fraction of the systems adopted.
Jessica, any other hands or comments related to either heat pumps or water heaters that you're seeing?
I am not seeing any hands, and nope, that was the last question was from Robert.
All right. Well, I will move us on to industrial process efficiency. Our current working assumption is a 1% efficiency improvement per year across all sectors. And curious to hear thoughts and questions related to that.
So just to note in this one that this is not including fuel switching. So that, I think that's on a subsequent slide. It would be on the process efficiency. So the this energy services needed for production of a particular output.
I know this is sort of a niche question, so thoughts come up later. Please send them our way. Any hands, Jessica?
No hands up, no questions.
Well, maybe we let this slide stay for just another 20, 30 seconds, give folks a brief chance to come up with questions. And if not, we can move on.
I'll just add that in some cases, we're asking the same question of multiple working groups. So we have a direct use fuels and industry working group that's meeting next week. And we're also going to pose this industrial process efficiency to that group. So I think we'll have a different mix of people.
Thanks, Edith.
Andy and Edith, there is a point that Tim added to the chat, which says it doesn't seem like that 1% industrial efficiency assumption is consistent with the climate protection program trajectory.
So this is not directly related to fossil fuel use. So it's to say that can a industrial process get more efficient over time in terms of the energy inputs used to produce a particular product, but those energy inputs could come from clean sources. So it could come from fuel switching into electricity, for example, using electric direct drive instead of ICE drives, or switching your boiler technology from gas to electric. It is just that for example, steam demand is less year on year than it was in present day. So industry could be fully decarbonized in the fuels that it uses by 2050, but it still will require energy to produce these products.
Thanks, Jeremy. Well, seeing no other hands or additional chat input, I think we can move on to the next slide, Edith.
Sure. And Andy, do you want to keep going? Do you want me to take this one? I think we talked about me taking this one.
Go for it. Thank you.
Okay. So now we're shifting gears to load flexibility in buildings. And you can see here we're dividing up residential or households, commercial and industrial. And we also raise a question here about, actually this is a repeat, isn't it, of the question up above about customer-sited standalone storage. And the question is what the kind of actionable question in the model, maybe I can put it that way, is what percentage of eligible stock is participating? And you can see up here a description of what stock is included. Jeremy can comment on whether it's exhaustive or whether there might be some other things in there, but we tried to put in the main loads that we're talking about here. And I'll also just add that there are flexibility load parameters in the bottom row, just to give you a sense of how the model is considering the ability of loads to shift. And I'll just also add that the model has an hourly resolution, so it's an 8760 resolution. So it does not allow, Jeremy can correct me, but as I understand, it does not allow for evaluation of intra-hourly flexibility options. Okay, and so I think, sorry, go ahead, Jeremy.
There are multiple answers here, so it would be an answer specific to each one of these. So we would expect electric vehicle participation to be a lot higher than, say, space heating or cooling, just because the customers are not losing much by participating in electric vehicle managed charging. But with space heating, cooling, then there is potentially lost utility, or the perception of lost utility, just given the correlation between high temperature and very low temperature days with outage conditions that may be called upon. These systems may be called upon.
And Jeremy, just to clarify, are you asking for a percentage that would be an average of these, or actually for separate numbers? For
separate numbers. So a percentage for space heating, or percentage for cooling, percentage for water heating. Our starting point assumption is 10% by 2050. It's pretty conservative on space heating and cooling, and then about 70% participation for electric vehicles.
So, Jeremy, we have a question in the chat, and it is, are we excluding demand response participation that is by degrees of heating and cooling?
I can explain that further. Like, it seems like we're talking mostly about shifting the hour at which you're using load versus the degree to which you're using load. So I'm just wondering if that was intentional or if that was just the question you selected.
Yeah, it's just the way that we are representing it in our model. So we have an underlying hourly shape for space heating, for water heating, and the way that we represent it in the model is that we can shift that shape backwards or forwards, and so we're able to remove load in some hours and compensate in other hours, but we are always shifting that load within the day, rather than just taking a haircut and not replacing that load somewhere else in that day. Does that answer the question?
Yes, Claire said it did.
Okay.
I'm not seeing any other hands or questions.
I suppose maybe it's just worth noting here, Jeremy. I mean, we have been looking at PGE's DR program, kind of existing programs that are in place. So there's some information out there, but I think that another ask might be if folks aren't comfortable kind of thinking of a number right now, as I was saying at the beginning, there might be some time for reflection needed. I think we would appreciate any kind of sources and information that can help make an informed decision here. I don't know, Jeremy, if you want to add to that at all, but on kind of what we're looking at, but thanks. Jeremy, can you, I was just going to ask if Jeremy could clarify, because I got tripped up myself. On a previous slide, we had customer cited batteries, and here we say customer cited standalone storage. And then the previous question was what level of participation should we assume? And here, what level of grid services? Is there a difference between the two in the way that this is modeled in terms of grid services? Like, is that utility programs versus participation, time of use, or what? Is there a distinction here to be made, or are we repeating the question? Because I realize we put two very similar questions on two slides.
So I think it is the question repeated, but with some different language. So I think that in this regard, we had some great input on this already, but how these systems would participate would be interesting to us. The way that we model this is if there is a fraction of the capacity available of these customer cited systems, then they can operate as a participating battery in the grid, but on the distribution side, and the model will freely use that, which is missing some of the nuance on how these systems would actually operate. But given the economy-wide scale of our model, we have to represent it kind of like it's a grid scale battery. But input on limitations that these systems might have if they were participating would also be interesting for us.
There's a question in the chat, Jeremy, which says, can we set an aspirational goal? Do we know the percentage required to meet our statewide goals?
So we don't need a percentage participation here to meet our statewide goals, because we can do other things. We can invest in infrastructure on the supply side, but it's all a question of cost. If we have a less flexible demand side, then we need to have more flexibility on the supply side, and that's going to cost something. And so what we found in other studies is that there is quite a lot of benefit to having some level of flexibility on the demand side. We have diminishing returns as we get to higher levels of participation, but particularly electric vehicle charging, super important for cost containment as we're going to a higher renewable energy system.
Kind of following up with that, David Clement added that the demand response participation in Northwest is quite low because few of the programs exist and there's been limited experience with it because we've had a lot of hydro. So interest in demand response is growing, and he adds that the Midwest independent system operator loads have a regional 10% demand response savings at peak. So that's probably the best case scenario for demand response in the US right now, is the way I read that.
Yeah, that's a good benchmark and one that kind of agrees with the starting point assumptions that we have as well.
So I think I'm just doing a time check. I'd like to move us on to the next slide. I think that there will be an opportunity to revisit all of these points when we start talking about scenarios, which I want to leave time for us to be able to talk about kind of the reference versus alternatives and what we might want to learn between the two. But before I move on, I'm just going to jump in, Jessica, because I see the comment that just came in. So Claire is saying that PGE touted some great success during some of the recent heat events. And hopefully they can help put some numbers to that. And I think that we would love those numbers. I don't think we have them yet. We have had a chat with PGE, so I don't know, Jeremy, you can remind me where we are with that, but I know that we talked about some of the stuff that they're doing. Okay, so I'm gonna move to the next slide. And this is the last one of these kinds of slides. After this one, we're gonna move on to a discussion about kind of what we might want to test out in different scenarios. And I think that will kind of help put our minds in the kind of in that space of what the modeling will be able to do for us. And maybe then we can start to understand the differences between the kinds of questions we might want answered and what that means for what we put in the reference and what it means for what we put in an alternative scenario. So this one focuses on electric vehicles. We thought it would be useful just to, they were kind of included up higher, but it seemed worthwhile to extract them since they are such a big potential load. And there are some pretty ambitious EV targets for different classes of vehicles in our state. So the starting point that we have here, we're talking about managed charging, and maybe Jeremy can help define that as kind of the way that the model defines it. But I'll just say that we're starting at 0 in both cases for today and ramping up. This is just a starting point. You know, so the starting point for discussion is for residential is the top one and commercial is the second row. For residential, we anticipate more participation than for commercial EVs. I also realize that there are some nuances folks might want to get into here in terms of fleets and things like that. And then there's the third question, which came up earlier, so we're coming back to it now. I promised we would. There's a question about what level we should assume for vehicle to grid for light, medium, heavy duty vehicles and for vehicle fleets. And Jeremy, if you can just elaborate a little bit maybe on managed charging, because I know these words sometimes have different definitions in different people's minds, so we're all on the same page.
Sure. So on the residential side, there is a charging shape in the model of basically aligned with the average customer on when they are at home versus when they are out in the world, and that charging is a mix of home charging and charging at public chargers. And when a customer comes home and plugs in their vehicle, they can delay that charging up to 8 hours in the model. And the model basically distributes that charging such that it is minimizing cost of the electricity system. And we're assuming that by 2030, most customers will have the opportunity to participate in that, and that 2/3 of customers will. And then on the commercial side, it is kind of a different story because it's kind of a time is money thing where you are either losing service, having to have larger fleets to offer the same level of service. And so we assume that fewer businesses are suited to doing managed charging. So we have a third there, and we're delaying that by up to 3 hours, given the generally shorter charging windows for commercial vehicles.
Thanks. And as before, we're looking for hands or comments in the comments box. We will have a transportation focused working group as well. I don't think that flexibility is on they're talking about some other things in that group. So I don't think they're touching on flexibility in that group. But we will have these questions up on the website.
Claire's got her hand raised. Claire, if you don't come on mute.
I'm happy to bring this back to some of the transportation folks on our team and see if they can help a little bit and come back. But as far as the commercial participation goes, it seems to maybe make sense to check in with transportation folks about the number of commercial, sort of breaking down and getting a sense of the percentage of commercial fleets where managed transitioning or commercial vehicles where managed charging might work, and focusing on that and having large adoption where it works versus like just you know what I mean? Like, I think we'd want to get to 75% of managed charging for the fleets and commercial vehicles where it makes sense for their business and use cases. And that might be 30% of the overall commercial fleet. I just don't know. But that's how I would think about at least the commercial side of this, is that thinking about our goal based on high adoption within use cases where it works, rather than thinking about the fleet as one static use case.
Thanks. It's a really good point. I assume, Jeremy, that in the model it would just be plugged in as an average, but that average
Yes.
might be informed by this kind of thinking. So it's a helpful comment to help inform what the average number would be.
Yeah.
And I'll just add in the chat that Jake Wise from PG said, be happy to engage with their planning and program teams to inform load flex modeling assumption. Robert Westerman has a follow-up question, which should this be broken down between types of EVs, EV charging systems, level 1 and 2 for residential, level 2 and 3 for commercial?
So the way that works in our model is that we are using an NREL study on what types of chargers are being used by different vehicle types. And so it is broken down to, when you add an additional electric vehicle, what share of a type 1, type 2 supercharger, all of the various different chargers, does that contribute to? So it's kind of a linearized representation of the addition of charging infrastructure needed for an additional vehicle. And that is true of residential vehicles, commercial vehicles, of heavy trucking. So that's how we're building that in. It's just kind of a ratio of different chargers associated with an additional electric vehicle of all types.
Thanks, Jeremy. I don't know if Robert has a follow-up to that.
I just wanted to say that if you're using a level 1 charger and it takes 8 hours to charge your vehicle, shifting that load by 8 hours may be an unreasonable ask of those households.
Yeah, and in that case, then it is the shifting isn't really necessary because you're spreading it out anyway, and so and that would fall into the inflexible piece of the charging demand. But yeah, that's a good point, and it's dependent on the type of charger as to how much of an impact that's going to have on needed grid investments.
Thanks for that comment. And thanks to Jake and to PGE. Appreciate your answer, and we'll be in touch. I don't see any hands or comments. I would suggest we move on to a discussion of different questions we might ask and try to answer in alternative scenarios to the reference. Okay, so I'm gonna shift us over. And Andy, can you remind me, do you want me to run us through this slide, or were you doing this?
Go for it. I think this is
Okay.
yours.
So, as Jeremy presented at the kickoff for the working groups, and we've talked a little bit about today, we have a reference scenario, and we have a limited but meaningful number of scenarios, alternative scenarios that we can model to understand what the difference is between one potential future and another. And the way that we are framing up those scenarios, or the way that we're trying to get information to decide what those scenarios will test, is by asking what if questions. And there are just a few examples here. And one of the reasons that we do it that way is because you can combine multiple questions into one scenario, or put another way, one scenario can help us get at multiple questions. So here are just a few to get us going, but what we're interested in is what kinds of questions you all would be interested in, or what the pivot points would be that you think would be really important to test, and what that might look like. And so, for example, here we have what if there's lower or higher demand response participation. Jeremy mentioned that other studies have found that not doing it at all has a higher cost, for example. But we haven't done that study for Oregon. What if adoption of energy efficiency technologies is slower? So if in the reference case, we build in more because that seems to be a more cost-effective route to go, then what if we model a scenario where it's slower? And what does that tell us in terms of the build out that we need in other infrastructure? What if there's more or less gas use in buildings? And there's a final one down here, which is what if Oregon sets a more ambitious economy-wide greenhouse gas target? That is a less efficiency-specific focused question, but it's one that comes up quite a bit, and that we also just wanted to add to this list for the group to consider as another alternative scenario that would provide potentially valuable information on what it would take and what the kind of pathway would be for something like that. So I'm going to stop talking. Jeremy, feel free to supplement if I've missed anything, or if you want to round out what I've said. And otherwise, just waiting for hands or messages in the chat. I think it's important to say that we haven't necessarily gotten to the bottom in this conversation, to the bottom of what the reference scenario that all the others will be compared against should be. Because each of these what if questions could live in one of two places. They could live in the reference or in an alternative, but the reference is the one where everything remains consistent except for the lever that you pull. And I think, Jeremy, maybe you could speak to what you've seen in other studies on kind of what approach seems to work in how that is set up.
Yeah, so in general, the way that we have set this up in the past is that the reference scenario, which is kind of taking that near term and long term look that I was talking about before, the near term being where is existing policy in Oregon taking us, and that's kind of through the 2035 timeframe, and then after 2035, what are the levels of extra ambition that we want to include in that reference scenario, such that it is consistent with a desirable pathway to achieve the targets in the future. And we know something about what is a cost-effective way to meet emissions targets in the future based on other studies that have been done in the Northwest around the country, and it tends to it tends to focus around several different principles. So electrification, efficiency. If we're going to very low carbon, then carbon management strategies. And so there's ways that we understand that decarbonizing the economy can be achieved in a cost-effective manner. So the reference scenario, we would like it to be this evolution from where existing policy is taking us through to coherent strategies that are aligned with emissions goals in the future. And that can be a relatively unconstrained scenario. So the things that we want to happen, we have them happen. So if we want to electrify on the demand side, then we don't hit barriers to doing that. We are able to electrify in that scenario, as an example. And then when we're asking what if questions, and you see this reflected in some of these what if questions, saying what if there is lower demand response participation? What if adoption of energy efficiency technologies is lower? Those are representing barriers to getting to those outcomes. So things that we may want to happen, but they didn't happen because it's hard for a lot of these things to it's hard to transition into those. And then there's other what if questions that are representative of different types of policy priority. And it's not necessarily that it's a different question. You know, what if there is lower demand response participation could be representative of policy priorities where that's not something that is prioritized in policy setting. What if there is higher demand response participation? So pushing harder in that area from a policy perspective, then investigating that scenario, what does that take the stress off of? So if we're doing more demand response, we're going to need less of something else in the economy to be able to reach our emissions targets. And what is that something that we're doing less of? So by looking across these scenarios that we're running to model each of the what if questions, we can learn something about what are the trade-offs? What do we have to do more of? What do we have to do less of? What might be barriers that we push up against? So if we're going more slowly in energy efficiency, then we're going to have to do something more in other parts of the economy. And will that something more actually be very hard to achieve? It may be close to feasibility boundaries. And so this is a way of building a richer picture about the choices that Oregon could make in the near term, about setting the state on the right pathway towards achieving these goals in the long term. So I think what we're looking for is in this section some out of the box thinking. So what are the things that in your mind you think of as being the biggest challenges for Oregon when the state is trying to get to a lower carbon future, and adding to this list. So are there things missing here when we're thinking about efficiency and flexible loads, or in terms of the overall goals for the state, which the last question is representing there. And I think we would, you know, this may be a cross-boundary kind of question here, where those things that are most important to people on this call, it doesn't necessarily have to be efficiency and flexible load related. If you have burning ideas about what is really important for us to be investigating, the kinds of questions that you want us to answer in the energy strategy, then we'd love to hear your input.
Thanks, Jeremy. I think I see a hand. Brennan.
So this may be slightly tangent, but what we're working on is large scale, like utility scale batteries. And so I know that industry relatively well, and batteries fit kind of in that nebulous flexible load, flexible supply kind of Venn diagram. But I think there is a moderate chance, maybe even a high chance, that there is a relatively significant decrease in the cost of utility scale batteries over the next 5 to 10 years of a technology like a non-lithium technology. There are a lot of different companies working on it, and they're starting to reach that point of entering the commercial space. And we have ESS just down the road from us here that is in there, but they haven't, just right now at least, haven't fundamentally changed the economics of large scale storage. But they could advance, and there are other alternatives that are coming in. And I think that when we're a model such as this, if there was the ability to distribute load, so to speak, of the potential for removing significant need for transmission at peak times, or basically smoothing that transmission requirement by having a flexible load at the end of, say, a long transmission line that allowed it to basically balance the peak ability of the transmission without having to upgrade it, but then fully servicing the increased demand maybe at the end of that line. I think there are potentials. The potential exists for a pretty radical decrease in the cost of utility storage over the next 5 to 10 years that I think could make some pretty significant changes in the tail ends of the model, so to speak.
Yeah, that's a really interesting scenario. So the cost declines that we are building into the model are coming from public sources, and they are declining. But in general, we're using NREL forecasts, and for the batteries, we're using Bloomberg and forecasts that are coming out of the electric vehicle industry, because it seems to be where the cost declines are being driven. And my question would be, is there a source of battery costs for a sort of more optimistic scenario that would be one that you would point us towards?
So we use EIA and a mix of them and NREL in terms of what we basically have the same thing of the I would say the 2 sigma realistic, plus or minus 2 sigma realistic boundaries. And for us, those represent not exclusively, but predominantly just in increase of efficiency and a generalized decrease in lithium cost. But those generally capture, one, they've been notoriously inaccurate. And so over the last 10 to 15 years, the accuracy to which most of those models have actually captured a 3 to 5 to 8 year out lithium price has been pretty bad. Both the exponential decrease 10 years ago, and then the moderate rise back up kind of over the last 5 years, and now the slight decrease again. They seem to be relatively backwards looking to a large degree. And so we've basically tried to make our own model of pulling NREL data of like, okay, if you have this demand, we've worked with one researcher out at in Golden. If you have this demand, if you drop the dollars per kilowatt hour stored from 400 of kind of where it is right now down to 75, even outside of lithium, what does that do? And so short answer is I don't have a good one I can point you at right now. I think sorry, I get a little verbose, but I don't have a good one you can point out right now. There are several papers out there that try to model that, but they're all pretty speculative.
Great. That's good information. Thank you.
So Edith and Andy, we've got some pretty good what ifs in the chat. What if EV adoption and vehicle to grid participation is much slower or much faster? And then the second one, which I'm wondering might be an opportunity for Jeremy to talk a bit about the energy wallet that the modeling can produce. This question from Shelley is, what if these strategies result in increased energy burden on low, moderate income or EJ households?
Mm-hmm. Yeah. So part of the analysis that we're doing post the modeling phase here is taking the outputs from each one of our scenarios on what it costs to provide energy of all types to customers. So what will it cost for their electricity, their natural gas demand, their natural gas, propane, diesel, all of those different things, and then calculating how that might change over time for different customer types. So LIDAC or EJ households that are located in different parts of the state or are facing different conditions, looking at a number of those households and projecting how their costs might be impacted, and looking more specifically at if those customers were to invest in demand side technologies at different times. So if they're investing in heat pumps or they're investing in electric vehicles in different years, which depending on their economic circumstances, they may be impacted on the timing of that investment. What would be the impact on their energy spending? And so this is this energy wallet analysis where we're looking not just at electricity, but across the board at all of their energy spending, and calculating, one, how that changes over time and how does it change relative to their income to calculate what the energy burden might be. And so up front, we wouldn't be creating a scenario to try and increase or decrease the energy burden, but we would look across the scenarios we have run to see comparatively what is the energy burden between those.
Thanks, Jeremy. And I think it's also a good reminder that this is one of the ways that the analysis can help inform policy discussions. So if we see what the relative energy burden is for different households across different scenarios, that might inform both kind of what is of more concern, which scenario creates more concerns, and also within the scenarios, kind of what it gets a conversation going on. All right, well, if we do this, how do we make sure to reduce that energy burden? And those policy conversations will start early 2025.
So we had another what if in the chat that I just wanted to flag for everybody, which was what if cooling needs or loads increase much faster than the the reference case. That's another good what if question. And then David provided some information about the Power Council's modeling as it relates to energy efficiency.
Jeremy, I just feel like there's a prompt here to on the question the question about cooling needs loads increasing faster than the base case. Maybe it's worth just mentioning how climate impacts are being incorporated and kind of weather related impacts and temperature impacts are being incorporated into the modeling. I think that might be useful to touch on.
Yeah, so we have underlying growth in our cooling needs over time that is based on EIA's annual energy outlook that is adopting a particular IPCC forecast on how heating degree days, cooling degree days are going to change. It is not specific to Oregon. It is a Pacific Census Division output from their work, and so it's an area where if people are aware of any work that has been done that is more specific to Oregon or the Northwest, on how cooling needs might be evolving over time, that would be interesting for us. See whether we can incorporate that into the modeling. I think in general that scenario is a good one there, because there is a number of things that could drive increased loads, and therefore, Oregon having to respond to that with more investment, and cooling needs is one of those. But also, rate of electrification, the impact of potential data center growth and crypto and chip manufacturing. So all of these things could contribute to faster load growth than we might have in our reference case. And that could be an interesting scenario where any one of those could be driving load growth, and what are the consequences of that in terms of the investments that we need to make in our energy system.
Thanks, Jeremy. I'm gonna indulge in one follow-up question on what Jeremy just said, which was, Jeremy, say we have a scenario like that's a high load growth scenario. I think that's something a lot of people have on their minds right now. Just to help illustrate how the reference then, what would happen to what we see in the reference in that scenario. So say we design the reference scenario as you were sort of suggesting, where we have quite ambitious efficiency and load flexibility out kind of beyond 2030 in the longer term. How does the model respond to something like a high load growth scenario, and what kind of, everything else would be constant, correct? But then how do we think about that from an efficiency perspective?
So it depends whether the load growth is being driven by investments in demand side because of fuel switching. So if we're switching from gas usage to electric usage at a higher rate than in the reference case, then that's giving us the opportunity for more demand response and flexibility, because we now have more systems that could participate in something like that. We're also reducing our gas demands. Then there's a scenario where load is just coming in. It is additional to any kind of fuel switching that could be going on. And that would be the data center case, where now we have electric load growth that could be large and it could be lumpy and require more investment in the electricity supply side, and potentially transmission investment.
Edith, it looks like Brennan has a question.
This is a kind of generalized question. Are there weights for the quality of data going into the model? And I ask that specifically, like you've obviously listed what I know of as like the gold standard of kind of good data that are coming in, but is there the opportunity to provide the model with, say, a plethora of low to moderate confidence So I'm thinking of like there are numerous commercial studies that individually I think of are not of great quality, but in combination, maybe a wisdom of the crowds sort of effect may be occurring that there's the opportunity to put in a great deal of moderate quality data that is balanced by the high quality data, but might have the opportunity to help refine the model in that respect, especially for these areas that were lacking kind of the really good stuff.
Mhm. So we tend to, at least for the reference scenario, we want to rely on publicly available and verifiable data from government agencies, national labs, because it's gone through a process of um, vetting and data curation. But there's the opportunity for looking at things like a ambitious technology scenario, or whatever you want to call it, where we see faster price declines, or we see technology becoming available earlier than expected, that would investigate what the impact would be of technology breakthroughs, or just lower prices, and the lower prices might come from industry forecasts of where they might go in the future. And scenarios that we've done like that in the past, where it is a ambitious scenario, have used, for example, with SMR technology, baseline case has been publicly available data, but the ambitious technology scenario has used like nth plant forecasts from developers. So there is the opportunity to include something like that. But I think it's as you were pointing out, it's useful to distinguish the two groups of data where we're consciously incorporating groups of data where it may be more speculative.
I ask because there are opportunities. It is slightly more speculative data, maybe not even in the extreme tech case, but just in a generalized. It sounds like, at least to some degree, there is at least not a ton of data specific to the Northwest or Oregon in some of the these questions, heat pumps and things like that we have coming on. Is the if opportunity for lower quality data in place of little to no data, is that something that would be helpful to the model, or would it be better to just kind of draw a harder wall of this is the good stuff and we don't want to put in anything that is more commercial or more speculative that may then have knock-on cases that we don't fully anticipate?
Yeah, I think it is better to stay on the conservative side of that
Okay.
scale, particularly as mixing those two sets of data.
Yeah.
It's often an apples to oranges kind of
Oh,
situation.
I totally understand. Yes.
Yeah.
I just was curious. I was trying to find the boundary of whether there needed to be a hard wall between knowledge and ignorance, or whether there was a kind of an attempt of, okay, here's the solid model and here's the more speculative version that incorporates more speculative aspects. And it sounds like as a policy, it just needs to be kind of a harder wall as a government project. Is that a fair statement?
Yeah, I think that's the base case that we want to build upon. And then if we do include something more speculative, then it would be in a specific scenario that is recognizing that.
Okay, thank you.
So Jeremy, one quick last question in the chat, and I know we're almost at time, is from Tim, and he's just wondering if the energy strategy will consider bigger population shifts, like from climate migrations from other regions of the country.
It's a good question. So I have never incorporated a population forecast that I know explicitly is building in those factors. But we are using local population forecasts, and I wouldn't be able to tell you right now whether those are factors that are coming into that forecast or not. And so it's a good question to do a little digging and see whether that is a contributing factor there.
Thanks, Jeremy. And I realize we're at time and we're trying to be respectful of people's time on a Friday afternoon. So I'm just going to say a couple of words and hand it back to Andy to take us home. So this was only 2 hours, and this is the only working group meeting we have dedicated to efficiency and demand flexibility before we all come back together. But we would love to hear additional thoughts that you have once you've had a chance to reflect. Here is the link where you can post those comments. We're going to take all of this on board, consider it, synthesize it, report back. So please don't feel constrained by this 2-hour window. Hopefully this was enough time for folks to understand in a bit more detail how we're thinking about the modeling, what the opportunities are for input. And then there's just a last slide on kind of where you can find information about our project and updates on meetings. And there's also an email address that you can reach out to. Andy, back to you.
Thanks, Edith, and thank you, everybody. Your input is highly valued, and we couldn't do this without you. So we really appreciate you taking a couple of hours out to make your voices heard. Again, please think, reflect, use the portal, reach out to us. Hopefully, you all know how to find us, but have a great weekend, and thank you so much. Bye.
Thanks, everybody.
I think this